Welcome back to the Michigan Business Beat, brought to you on the Michigan Business Network. Chris Holman here, and we're coming to you from our studios at the Capital Region International Airport. And we're going to remain in this area, East Lansing again. We're going to go back and visit Martin Commercial Properties and spend some time with Chris Miller. He's the Senior Vice President of Industrial and Investment Advisors. And it's good to have you here, Chris. How you doing?
I'm doing good, Chris. Thank you. Thanks for having me.
I would say you're a pretty busy guy these days, and let's start with some of the reasons why. That the industrial market saw a pretty noticeable drop in vacancy first quarter of 25. What's driving this demand, and how is it affecting across Lansing?
Yeah, so I'd say there's a couple different factors affecting demand right now. Manufacturing still one of the bigger ones with a couple of the larger projects we've had in our market. Ultium being one on the automotive side. Neogen's got a large manufacturing project that they're wrapping up. So manufacturing, with the tariff situation has slowed a little bit from a demand standpoint, but I think given that those are kind of working themselves out, we're hoping the second half of this year we'll start to see more activity from a manufacturing standpoint in terms of demand in our market. So that's a big one. The other one we're seeing quite a bit of activity, I'd say probably the most on the smaller side of things is in logistics. We've had a handful of logistics companies come into our market. Some are relocations, some are new locations for companies looking at mid-Michigan, just given our position in the state from a logistics standpoint. And that will continue, just given the activity we've seen thus far. We think that's going to kind of piggyback second part of this year as well. So with that, we've seen kind of a further tightening of our market, and we've already been in a pretty tight industrial market the last, I'd say, handful of years. Historically, our vacancy rate is still a little above, I'd say, 2 or 3 years ago, and that's really due to a couple large buildings that have been on the market and have not been absorbed yet. But I see those probably getting absorbed in the next, call it 6 to 18 months, and with that, we're going to be probably back to historic, if not a little bit tighter than historic levels, and that's going to obviously create some further challenges in our market.
It's kind of interesting because of that limited inventory to begin with and increased absorption. How's the market responding, I guess, in terms of new development, and are there any speculative builds?
Yes. So historically, we have not had a whole lot of speculative development in our market. You see that more so just given the size of our market compared to Grand Rapids and Detroit. We've got some challenges where from a tenant base perspective, we just have not seen that. And now with the increase in construction costs and higher interest rates, it's become even tougher to kind of justify speculative development in our market. So what we've been seeing recently and historically for that matter is more development on a build-to-suit basis, which just means the developer will have a tenant already committed to the building that they're going to put up, and they're going to build it to their needs, and already with a tenant in hand, those projects become a lot more feasible. So I expect that's a trend that's going to continue and only be even more so just given those constraints in our market. And then the other thing, kind of piggybacking on that, we're seeing here is really challenges of finding good land sites now for new industrial development. I wouldn't have said that 5 or 7 years ago, but with the development we've seen, we're having challenges finding large scale industrial parcels in our market, and that's going to be a challenge. A lot of our municipalities are going to have to have conversations on, if we want to continue to grow as an industrial market here in Lansing, we need the land to support those type of projects. And whether it's utilities or zoning, we need to have those type of opportunities for the type of projects that we want to try to attract here. So between that and the other factors I just mentioned, it's challenging from a speculative standpoint. But it would be nice to have buildings as we try to attract tenants here in our market to put in, but we just haven't seen that yet.
Very difficult to get that property, and to get it shovel ready to boot is even another story. Hey, Chris Miller, Senior Vice President, Industrial Investment Advisor with the Martin Commercial Properties Company. Thanks so much for joining us. Appreciate it, bud.
Yeah, thank you.
All right, you've been watching the Michigan Business Beat on the Michigan Business Network. I'm Chris Holman. We'll be back with more.